Hello everyone, Hal Konoglu here. Welcome to Please Remove Your Shoes. And today we're going to focus on the Canadian real estate market. Here's a report that was released by the Canadian Real Estate Association for the month of December. National home sales rose 1.3% month over month in December. Monthly activity came in 39.1% below. Newly listed properties dropped 6.4% month over month, and the HPI declined by 1.6% month over month, and it was down 7.5% year over year. HPI is a better price indicator for home price trends. Just to mention, the actual national average sale price posted a 12% year over year decline in December. The home sale gains were mostly led by property sales in Ottawa and Edmonton. Here's a chart. Here's a graph for the monthly home sales hovering around the 33,000, 35,000 mark, still below that 10-year monthly moving average in Canada. Jill O'Deal, the chair of Canadian Real Estate Association, stated, in 2022, we saw one of the biggest single year shifts on record in Canadian housing activity, from record highs last winter to just below the 10-year average trend a year. That said, the market's adjustment to higher rates may be mostly in the rearview mirror at this point. So that's basically bringing the buyers out of the woods who have been watching the interest rate hikes in the past year. That could start to bring buyers back, like as I just mentioned, that could start to bring buyers back off the sidelines this spring. There's long-term value in homeownership, and if you're looking for information and guidance, your best bet is to contact a local realtor. There's an interesting point here about the national average home price that was 626,318 in December 2022, which is down 12% from the same month last year. If we were to remove the Greater Vancouver and the Toronto area, that would take off 118,000 from the national average price. Going across the country here with average prices, Yukon is sitting at 487,133. National Northwest Territories, the average home price is sitting at 475,305. British Columbia is sitting at 907,456. Alberta has seen an increase compared to last year, sitting at 429,496. Saskatchewan HPI benchmark price is sitting at 316,100. Manitoba average price is sitting at 336,485. Ontario average price is sitting at 812,338. Quebec is sitting at 458,792. Newfoundland and Labrador HPI benchmark price is sitting at 281,200. New Brunswick HPI price is 265,800. Nova Scotia average price is sitting at 369,000. And PEI here, average home price. Oh, sorry, this one is an HPI benchmark price sitting at 352,300. A quote by Canadian Real Estate Association senior economist Sean Cathcart: the housing market story of 2022 was about high inflation and rising interest rates. The 2023 market will depend on the timing and the extent those factors move back in the other direction. So this year, we're predicting to be a monitor or what's going to happen type year because of the interest rate hikes from the previous year. Not so much of a recovery year just yet. Demand for housing continues to grow and supply remains the biggest issue across the spectrum. So we're going to keep our eyes on the supply as well because of the demand. Sean Cathcart on his interview, I watched his interview. He also added if we were to hit recession this year, all bets will be off. Looking into the supply, this is CMHC's report from I believe last June. To restore affordability, an additional 3.5 million affordable housing units are needed by 2030. Aled Ab Yorweth, the deputy chief economist from CMHC, stated Canada's approach to housing supply needs to be rethought and done differently. There must be a drastic transformation of the housing sector, including government policies and processes, and an all hands on deck approach to increasing the supply of housing to meet demand. So government policies and processes, this is very important. Government policies and processes and transformation of the housing sector. A provincial chart here also states the need for housing supply per province and along with the target level of affordability. Ontario leads the way with 37% level affordability. It needs 1.85 million housing starts. So, looking into the housing starts in Canada, in December, Canada's sitting at 248,600. So if we roughly do the math, we're far behind, and there has to be a significant amount of transformation in the housing sector. And here's another quote I found by the BMO economist Robert Kavchich. The jobless rate in construction is near a record low. So this is more about the housing sector transformation. The jobless rate in construction is near a record low. Vacancies are at a record high. We have a deep shortage of skilled trades, and the cost of building materials is already rising quickly. So, unless the economy really rolls over and is in need of a stimulus, effectively doubling the rate of new construction over the next decade, it will be extremely difficult without significant inflationary pressure. So, if we do the math, this 3.5 million and looking into this number here per year, 248,000, around 250,000 housing starts, that could take up to 10 years to reach affordability for housing in Canada. Keyword here is affordability, right? So also going back to Sean Cathcart's quote here about the interest rates, if we look into the rate forecast for 2023, here's a report by Altura Financial. They're going to be focusing on the historical context of the mortgage rates, and as well as Bank of Canada, of course, their rate hikes. By the time of this recording, there might have already been a rate hike of 0.25, and it's also talking about reducing your risk against mortgage interest rate hikes. Down here, it states eventually central banks will begin lowering rates again to stimulate the economy and pull us out of recession. So, in case we're in recession, central banks will have to step in and lower the interest rates eventually. So, when will this happen? According to Altura Financial, in 2023, bond markets are current. So this is the bond markets projection. According to Altura Financial, bond markets are currently projecting the first central bank rate drop in November. This would mean a full 10 months at the peak rate, longer than the 6-month peak rate average. However, to take more careful and conservative projection, it could be January 24 before the first Bank of Canada rate drop. So, given market conditions, a good reference point would be between November 2023 and January 2024 for the first rate drop. However, if the economy slows harder and faster, then we could see the central bank lower rates sooner in 2023. So those are the numbers on a nutshell. We've looked at the December reports and we've looked at what the experts are saying for our future predictions. If you have any questions for your local real estate market, please send me an email. I'm a real estate agent in London and surrounding area. If you're not from that part of the country, you can also send me an email and I can partner you up with a real estate agent in your local area. We're also going to touch base with the dynamics of the real estate market in Canada. There's a lot going on between provinces. A lot of people are changing provinces due to high prices as well. Immigration has been continuing to grow. So there's lots going on in our country, and we're going to try to see if we can capture any sort of predictions that can help you understand the real estate market even better. So please like and subscribe my channel, and I hope to see you in the future videos. Thank you and take care.